Hi, today we're looking at the Dow and the S&P 500. Uh Today is Monday, December 17th, and we are hitting a very low point in the year. Today we opened at 2.5k, and the low is 2.53. So you can see on the chart here that it has dipped down. It broke through the floor, and yeah, it's just tanking right now. This is the S&P 500, the top 500 companies rated on the stock market. So it's basically um, basically if you had invested in the stock market or got into the stock market this year, anytime before this date, you would be in the red, and any stocks that you bought throughout this year would be down right now, typically. There's a few. I have some stocks that I bought into recently that IPO'd, and they're in the positive, but who knows how long that's going to stay for. But chances are, everybody is in the red. So if um if you had to wait the whole entire year to find the low point to buy in, like it's pretty bad. Um, so like, why do so many people invest in the stock market? Well, I was looking at some numbers, like how many people, like the number of people that are actually investing in stocks and mutual funds and 401ks, and it's rather a very large amount. It's about 54% of Americans are investing, so that is a large number. Um, if you see somebody flip a coin, chances are, you got a 50% chance of them being invested in stocks. Uh, okay, these details that we're looking at on the screen, I wanted to really point out the historical data, like the 52-week range. You see that the indicator is right next to the very bottom, and it shows just how low the market is right now on the S&P 500. Everybody that had calls, option calls, betting that the market would improve, they're selling off those calls, and the number of puts, the people that are shorting the market thinking it's going to go down, has changed over 100%. The market sentiment is very, very shifted toward a downturn. Oh, and it's crazy news. Okay, so here's the Dow Jones Industrial Average. We're going to have a similar story here. We opened at 23.98. The low is 23.34. So here we are, taking at the very bottom again. Here you see the 52-week range, um, just sliding down. Yeah, it's crazy. So we're at the bottom. We're at the bottom, folks. And here I'd like to take a look at the RSI. Okay, the RSI Okay, in October, I had a video for the spooky stock market sell-off. You see that happened right in October. We reached that peak, then it came down, and since then the market muddled around for a little bit. Some people bought in when it was low, started to climb up, had a couple peaks, and now we're back down at that same low from the October sell-off, except for now the price is much further down. Much further down. 25 down to 23. So it's crazy. So what's been causing this? Well, the president was doing some numbers to boost the economy, and some of the things that he was doing was things that the president would do if there was an emergency, like you know, unemployment's real critically low, or the market was in trouble to begin with. The market was already strong, and he was doing things to bolster the economy up front, like with the tax cuts. And the feds had to counterbalance by raising interest rates, and this created a lot of turbulence in the market. These are both factors to keep the economy in line. The feds want to raise the rates so that if something does happen, they have some wiggle room to help improve things. And the president has been trying to bolster the economy, sort of as his reward of electing him as president. So it's created quite a turbulence. And then the tariffs this year, those have caused issues with the trade, with market uncertainty. A lot of raw materials have been taxed instead of the finished product. So I don't understand why we would want to do all our own mining, but we're taxing tariffs at the level of raw good materials. And who knows how long this is going to go on for. It's going to be the president's third term, which is historically the strongest term of a presidency. So we'll see the market start to react in a positive way going into next year. And, my gut feeling is that, after January, the market will start to show the signs of the recovery. So for all the people that have watched my videos, I've encouraged to invest. And if they've gotten into the market this year and all of a sudden they're in the red, just wanted to put out some information as to what's been going on. And, if you feel like a fool for investing in the stock market, well, it's it's a numbers game. So really you have to be patient. These types of things do occur. So unless you're planning on retiring next year, I don't think you have too much to worry about. But that's my opinion. So I was down 1.91% today. The only stock I'm positive in is Edison. I'm up 9% on this stock, and that's because I had bought in after that recent dive. And it's come back up and fighting to hold its position. But everything is pretty much down. Yeah. So here's how it looks. So my advice is just to stay diligent, be prepared for some volatility, and remember to start buying stocks at a good time, because it'll help the recovery once the price starts going up. And I'll have more on this on when I'm doing that in my portfolio. I haven't purchased any stocks for quite a while. November 8th. So it's been about 6 weeks since I've put any money in the market. Okay, so that's what I wanted to take a look at today. Hope this video was helpful, and I'll catch you on the other side. See ya.